What's up, everyone? It's Scotty with MoneyVest, and markets here getting closer and closer to their all-time highs with the S&P, NASDAQ, and the Dow, all three indices pushing higher on the day once again. And we did have, of course, a lot of crypto mining stocks absolutely rip on the excitement and the optimism around a spot Bitcoin ETF, with, of course, a lot of individual stocks once again ripping higher, especially on the growth and more speculative side. Other than that, of course, we did have big tech and Magnificent Seven somewhat flat to slightly down to slightly higher. So of course, Tesla, AMD, Meta, Nvidia were pushing higher, with Google, Microsoft, and Amazon pulling back on the day. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like. And I also want to remind everyone there's only 2 to 3 more days left for that 16% annual discount. So if you're interested in joining, definitely do check that out. And today is the last day for the sale, for the Christmas sale on our courses. So there is going to be up to a 70% off on the entire bundle. You get lifetime access to over 130 plus lectures and over 30 plus hours of content. So link's going to be down below. Coupon code is going to be Santa Rally. Definitely do check that out if you have the time. And like I said, tonight's the last night if you want to take advantage of that Christmas sale that we have going on, for 50% off on individual courses and up to 70% off on the entire bundle. So Dow Jones pushing up 30 basis points, S&P up to almost 4,800, and the NASDAQ here closing in at just under 15,100 here on the day. So Google slightly lower, Microsoft, Apple about as flat as they can be. Tesla here pushing up close to 2%, AMD and Meta also rallying along with Uber, Eli Lilly, and of course Walmart and Costco. A little bit of that defensive sector doing really well as well. And of course industrials were slightly higher, energy was slightly lower because oil prices started to roll back down. And this right here has been the entire state of the market in the last 1 day, 1 week, and the 1 month. 1 month, of course, everything is green. All 11 sectors have rallied in the last 1 month. Of course, in the last 1 week, consumer cyclicals and utilities are down. And in the last 1 day, of course, we've got utilities, communication services, and energy. Those are the 3 sectors that are underperforming and down. Everything else is pushing higher. With canola prices, we got coffee, natural gas, lean hogs, oats, palladium, sugar, everything pushing higher, with orange juice, soybean oil, live cattle, and lumber prices pulling back as well. With Bitcoin here, of course, charging higher once again at almost 43,500, with the Ether pushing up to over 2,400 as well. So S&P 500 futures are a little changed as index inches closer to an all-time high. So the action follows a modestly winning day on Wall Street, and with just 2 sessions left in the trading year, the blue chip Dow and the S&P 500 are poised to finish higher by more than 13% and 24% respectively. The latter is within 0.5%, less than 1% of its highest closing level, which was set in January of 2022. So an all-time high from the S&P 500 in the next 2 days. Let me know in the comment section down below. Let us know. Comment down below if you believe the S&P is going to hit an all-time high before 2024 in the next 2 days, Thursday and Friday, if the S&P is going to hit an all-time high this year, or is it going to be next year? And the NASDAQ, of course, is on track for its best year since 2003, up over 44%. It has still got some ways to go before getting up to all-time highs. Of course, the NASDAQ 100 is already up there at an all-time high because of the concentrated Max 7, but the NASDAQ Composite, which has a lot more stocks, is still, I think 5 to 6% shy of its all-time highs at the moment. Last time I checked, it was a little bit under 9%, and right now I believe it's under 6 to 7% at the moment. Don't forget, courses, links down below. Santa Rally does expire tonight, so take advantage of that. Now going over to crude oil prices first. So we're seeing a little bit of a pullback again. It did drop over 2%, back down to $74, $75 a barrel. So this right here, of course, is going to be that support level to watch for crude. That's going to be that support. Of course, if we do end up breaking down below this level, the next level is going to be $66, $67 per share. So this right here is going to be that level to watch. Of course, we are seeing a little bit of this downtrend. In other words, lower highs and lower lows. And like I said, support level is going to stay put at $71, $72 per barrel for crude oil, all the way down to $66 per barrel as well. That's going to be that support level. Volatility wise, we are starting to once again come back down. It's a little bit over 4% down on the day, trading under 12.5. And this right here, of course, is going to be that red rectangle to watch for volatility. And of course, the level that we are constantly watching for deploying more cash and being more aggressive and dollar cost averaging and, you know, taking trades on the long side is going to be levels consistent with 18, 20, 23, 30, 40, 50. The higher the VIX goes, the better it is for us from a risk reward standpoint, the better it is that we can start looking at opportunities, and of course, start deploying cash. Once again, be a little bit more aggressive. Now, going over to Bitcoin, mostly consolidating sideways in that range. So this right here really is going to be that range within which it's been trading, and resistance staying put at roughly around 44,000, with a support level sitting put at 40,000 at the moment for volatility as well. Now going over to the markets. So first things first, S&P 500. What a year this has been, folks. What a year this has been. Absolutely incredible. Now, look, one of the things that I was thinking about earlier today is that in the markets, there will always be this analysis of I could have, I should have, and I would have, right? And what that means, it's basically, in hindsight 2020, we all would have made different decisions, right? We all, Jesus, my hair is like, we all would have made different decisions, meaning that I was looking at my Mara position today. I was looking at my Marathon Digital position, and I had close to, 1,400 shares with a decent average. And I ended up getting out at around $23, right? So that's where I ended up selling, because I'd held that position for over almost a year underwater, right? Because of the fact that Mara was, so aggressively down from its all-time highs. It was selling off. It kind of bottomed around $3. And of course, since $3 per share, which is, December of 2022, the stock is up a whopping 900%, right? And I exited my position at $23. And from those $23, Mara has rallied now even more to 31. Like, this has been an incredible rally. So if you kind of look at where I exactly sold $23, it has rallied another 34%. So I did leave a lot of profit on the table, like a lot. 34% for such a big position is a lot of money, right? And I was thinking about this morning, and, oftentimes, yes, there is that sort of pain of missing out on the reward. As humans, we're always wired to avoid losses more than gaining returns, gaining actual profit, right? So our human brain is wired in a way that we do our best to avoid pain more than achieving pleasure, than kind of getting pleasure. So that's just the way we are. But of course, we do feel FOMO. We do feel that we missed out on some huge gains, like I did with Mara. 34% is a big deal. But at the end of the day, I also understand that this is not the only opportunity out there. Yes, there's going to be times where you're going to miss out on potential opportunities. There's going to be times where you do miss out on potential gains and moves, and you can't avoid certain losses. That's part of the game. That's part of how markets operate. You're not going to catch every single move. You're not going to be able to be perfect in every single trade. You're not going to time every single trade perfectly. It's just not going to happen. So it's just that acceptance and understanding that, okay, this happened. It is what it is. And we move on, learn from it, and move on to the next sort of opportunity and next trade and next investment, right? So if you ever find yourself kind of feeling that, oh, I missed out on that move, or I should have bought here, I should have sold here, just, it is what it is. Like, that's what makes you human, right? We all have our flaws and we all have our imperfections when it comes to trading, because a lot of it is psychological, right? Like I said, I held on to this position for over a year. I was underwater for most of it, and then finally got a little glimpse of profit when it was at $23, because it's rallied over 700% year to date, and it's up over 900% from the same time last year. So I was kind of excited to take some money off the table, and in this case, pretty much exited entirely because I was underwater for such a long time. And then, of course, missed out on even more of a rally of 34%. But it is what it is, right? This is what makes the market. Can't just get stuck up on this potential trade or one trade. There will be opportunities in the future. And in my defense, I mean, look at the RSI. It's absolutely overblown. 91. I mean, how is it like 91? Like, incredible. Incredible overbought conditions with the MACD and the RSI as well. But like I said, it is what it is. So don't stress yourself. Don't get too fixated on a missed out opportunity or a missed out trade. There will be opportunities. There will be hundreds of opportunities in the market. We just got to keep our eyes and ears open and kind of help each other, support each other, discuss these in our Discord. And, over time, as long as, and that's the thing, right? Conservative approach leads to being in the game long term, right? If you're always aggressive, if you're always very, very risk prone, if you're always risk on, sooner or later, one bad decision can really blow your account up, right? So that's the last thing you want. You want to stay in the game long enough so that you can take advantage of all the opportunities that present in front of you, right? So you don't want to be too aggressive all the time. That's why conservative approach that I employ and I encourage allows me to be in the game long enough so that I can take advantage of other opportunities, even though I miss out on a few here and there. So just wanted to share that message very, very quickly. But going over to the S&P 500, resistance at 4,800, so that's going to be that next level to watch, and support at 4,727. Of course, that's pretty much the all-time high for the S&P as well. And again, take a look at the overbought, over extended conditions here. We've already talked about it, but this has just been a very significant move to the upside. Lots of money flowing into equities again, and we're just slowly and steadily kind of drifting higher at the moment. Now, talking about the NASDAQ, same thing, a little bit under 15,100. So next resistance is going to be all the way up to as much as 15,400. Of course, RSI pushing up to an overbought level, 73. MACD also up there with it. And of course, support level is going to be at 14,400 to 14,600 for the NASDAQ as well. And of course, we've seen a very, very strong rally and momentum upwards. Talking about Apple here, and Apple on the day also pushing higher from that support that we talked about. Didn't quite come all the way down to 190, but of course, pushing higher a little bit from those levels. Resistance all the way up to 198. So that is going to be that resistance to keep in mind. And like I said, support level is going to stay up at $190 per share for Apple, and still within the context of a very nice uptrend right now. Talking about Amazon, and Amazon here also just consolidating sideways. Support level is going to be at roughly around $148, with of course that next target and next resistance at close to 161 for Amazon. And right now we're just mostly consolidating sideways at the moment. Lots of consolidation here. Then we got a huge breakout beyond that, and of course support level now is going to be 148, resistance at 161. Talking about Tesla, and Tesla here also pushing higher very, very nicely. So continues to move up, 261. Next resistance and target at 269 for Tesla, with the support level staying put at $240 for this company. And of course, a very nice uptrend here. It was trading within the context of a downtrend, but now I can confident that it is on a very nice uptrend of higher highs and higher lows. But of course, we do have a pretty significant resistance and supply sitting at 270 all the way to 310 and 320 for Tesla as well. Talking a little bit about PayPal, and PayPal here on the day also pushing higher. So very nice move to the upside, up over 19 basis points. $62 is where it's at. Next resistance is going to be $65 per share, with a support level at $56, $57 for PayPal. And of course, we have seen a very nice move to the upside of higher highs and higher lows once again. And like I said, next resistance and target is going to be at $65. Talking about Visa. And Visa here, again, lots of consolidation. So we haven't really seen a lot of momentum, right? The momentum's starting to kind of fade for a lot of these big tech stocks, and of course, including the established companies like Visa, Costco, and PayPal, and Square. Like a lot of these companies are really just consolidating sideways. We're not seeing a lot of momentum at the moment. Just kind of makes sense because this year it's like been so much rallies that now it's starting to kind of, okay, it's the holiday season, volumes are low, and we're mostly trading sideways, with the support now for Visa at 245, 250 at the moment. Nvidia here, on the other hand, up another 28 basis points, so just a little bit under the all-time high of $505 per share. So right now trading inside this resistance area, and of course support level is going to stay put at $400 per share for Nvidia. And of course we've got that green rectangle that's going to also be that support and resistance. Right now it's where it's at close to $500 for Nvidia. Talking about advanced micro devices, and AMD here continues to charge higher to $146, up another 1.85%. Next target and resistance is going to be at 156. Incredibly overbought and overextended, but gotta enjoy the ride while we can. And support level is going to stay put at about $130, $131, with that next resistance and target at close to 156 for AMD moving forward. Talking about Meta platforms, and Meta here also continues to move higher, a little bit under 1% in the green. Support level is going to stay put now at 352. That's going to be more of a near-term support, and of course all the way down to 315 and $330 per share for Meta, and that's going to be inside the higher highs and higher lows. So this right here is going to be that uptrend of higher highs and higher lows for Meta. Talking about Netflix, and Netflix here also continues to move up. Lots of consolidation sideways right now. So this right here is going to be that support at close to 485, all the way down to as low as $450. That's kind of in line with its previous resistance and that support level that we've been watching for Netflix. And of course, very nice recovery and a rally year to date, up over 65%, exactly Netflix. Google here, on the other hand, is slightly lower, down about 1%. That kind of makes sense because it was already trading inside this red rectangle, and that's an area of resistance. So 144, that's going to be that level of supply. And right now we're starting to roll over a little bit. RSI is coming down. MACD is also showing some signs of weakness. So if you do end up pulling back, 126, 127 is going to be that support level to watch, and that's really just been the support here, resistance here, just lots of consolidation sideways in that range for Google. Talking about Microsoft and MSFT, and Microsoft here also just consolidating sideways, so basically about as flat as it can be, so no analysis here either. Support level is going to stay put at 366 with a resistance all the way up to 384 for Microsoft moving forward as well. And finally, we got Enphase and Costco, and Enphase here on the day, slightly down about 1.25%, so back under 136. I've got a covered call at 135, so we'll see if it actually does end up trading below or above that level by the time January gets here, but it is overbought, so I wouldn't be surprised if it does end up pulling back. And support level, as we have already discussed, is going to be inside this green rectangle in the low 100s, and next target and resistance at close to 151 for Enphase. And then finally, we got Costco. Costco here continues to move up. 666 is where it's at. Very nice recovery back up. Very, very overbought with an aggressively high 52-week high at the moment at 666. And of course, very overbought as well. So support level is going to stay put down to $603 per share. So hope you all enjoyed this video and a complete update on the markets. Make sure that you drop a like and subscribe to the channel. I would really, really appreciate that. And links to our Discord and Patreon is going to be down below. And don't forget, 70% off, up to 70% off on the entire bundle. Coupon code Santa Rally expires tonight at midnight. So definitely do take advantage of that while you can. Link's going to be down below. And individual courses are going to be 50% off, so half off for Christmas. As always, happy investing. I'll see you all in the next video.